Welcome back. So even though cues across Asia are fairly red, the implied open is telling us that we'll start positive yet again. Positive momentum continuing from Friday. There you go. It's actually building now. It was 60 points when we last checked. Now it's about 70 points. So looking good and right up there. I mean, the question is whether the market, the Nifty, can actually take out 26,100. That's where the index has been getting stuck. That's a bit of a congestion zone. So we'll see. Anyhow, there's, of course, a long list of stocks to watch as well. So let's straight away get to it in our CNBC TV18 list of top stocks to watch. Guys, morning to all of you. We are getting the fag end of the results, so we'll wind that down. But Kotak Mahindra Bank is in news this morning. Gaurav, fill us in.
Kotak Mahindra Bank is in focus, and the reason being that 21st November is the date when board will consider stock split. Now, remember, last stock split we saw was in September 2010. So definitely after 15 years, we may see some stock split action happening in Kotak Mahindra Bank, and the current face value is around 5 rupees per share. Apart from that, let's also go back in time and see what happened in second quarter. We saw ROA was at 1.9% and ROE was at just 10%, which was a bit below its own FY25 numbers. So that is something which will keep the bank's performance, specifically the stock performance, on leash. Apart from that, we also have some triggers coming up like net interest margins, which management said will expand in second half. So definitely that is also something that will be considered in the stock performance. Apart from that, let's also not forget that there is some speculation that they are considering buying stake in IDBI Bank. In fact, while talking to us, management said that they look at every opportunity to see if it makes strategic and financial sense. So that is also something that will keep the stock in focus. But as of now, 21st November is the date where we will be watching out for Kotak Mahindra Bank and any action happening in the stock split.
Okay, all right. Keep an eye out on Kotak Mahindra Bank, and you're getting closer to your date as well, Gaurav. Thanks a lot for joining in and filling us in with that. Moving to Sudarshan, he's here to tell us about Tata Motors, the PV business. Still a little bit sticky, sir, under pressure?
That's correct. So it was the first quarter when Tata Motors passenger vehicle business has reported earnings as a standalone business. So standalone business is the India segment and for JLR, and earnings for both these segments are weak. Company has reported losses for both standalone and consolidated business. Worst part is JLR has revised its guidance lower. For EBIT margin, now it's expecting in the range of 0 to 2% versus earlier guidance of 5 to 7%. On the cash outflow front, it has increased the guidance to almost 2.5 billion pounds from almost to zero. Now, if you talk about they had faced the cyber incidents attack, and because of this, in the consolidated business part, they have reported the impact of almost 2,010 crore. What's going forward? So for JLR, it's expecting Q3 also to be impacted of cyber incidents and normalcy to return only in Q4. For JLR, again, another weak quarter that we're expecting. For standalone business, company is saying that the growth for H2 FY26 will be in double digit. For FY26, growth is likely to 5% plus and minus 2%, so almost in line with the industry. And also for the standalone business, going forward, new launches may improve the new launches may aid the growth. So overall, just on the basis of Q2 earnings, I'm going with red.
Okay, all right, got it, Sudarshan. So indeed, a tough quarter at Tata Motors PV. Let's hop across to Vinny, find out how Siemens fared in Q2. Vinny?
Hi, so in the September ended quarter, the company's numbers, a mixed set of numbers that's come in. When you look at the revenue, that beat the analyst expectations, but in terms of the margins, that was below what the street was expecting. So let's look at the revenue growth, 16% growth in terms of revenue. Other income has seen a decline of 48%, while in terms of EBITDA margins also, we're seeing a compression coming in 11.93% versus 12.23%. So contraction in terms of EBITDA margin. Profits, yes, lower by 7%. But do not forget, last quarter obviously had that adjustment. So we are adjusting the profits of that number of Siemens Energy, that discontinued operations from Siemens. So that has taken place separately, and that is why that adjustment comes in for the PAT. But still, the PAT is impacted by lower other income as well as higher other expenses is impacting the profitability, and that's why the decline of 7%. Apart from that, the company has managed to see good growth in terms of orders as well, 10% growth there. And execution seems like that's improved in the smart infrastructure side of the business, mobility side of the business. that's seen an improvement because that side of the revenue has seen a growth. Digital industry side of the growth has remained soft. That is mainly weighed down by the low carry forward order backlog as well as muted private capex that is still impacting the digital industry side of the business, and low voltage motors also has continued to face some bit of a headwind there, so that also has seen some pressure there. So overall mixed set of numbers, we could see slight bit of a green coming in here.
Okay, all right, Vinny, got it. Thanks very much. So green for Siemens perhaps today. Back to Sud then. Oil India, Sudarshan, what about this one?
It was an operationally weak quarter for Oil India. Bottom line has improved or risen or seen a sharp rise because of other income, which has increased to 830 crore versus 180 crore. Also, company has seen an increase in the tax write-back. It has reported tax write-back of 102 crore versus 21 crore. But if you take a look at EBITDA, it was down 17% and margin has fallen to 24.3% versus 32% that company had reported last quarter. Two of its major segments, that was crude oil, where margin has fallen almost 360 basis points, and natural gas margin has fallen more than 1,000 basis points. So I'm going with red for Oil India.
Okay, all right. Thanks a lot for that, sir. Well, let's go across to Ekta. She's here to tell us about Glenmark Pharma. That was actually seen delivery-based buying and long build-up. But those numbers are a little bit shocking. Ekta, tell us more.
Well, yes, it was a quarter of exceptional items this quarter for Glenmark. So while the reported revenue this quarter did have that one-time income of around 3,670 crores from AbbVie, the licensing deal that they had for ISB 2001, there was an exceptional outflow of 1,385 crores. Now, there were exceptional items mainly because of the India business, because of the GST changes. So the India business itself was down around 86% on a Q-on-Q basis, 87% on a year-on-year basis. There was a provision on certain inventories of 590 crores. There was 490 crores related to change in inventory model, etc. And there was an impairment of around 200 odd crores. So the adjusted revenue this quarter was around 2,380 odd crores, and adjusted for AbbVie, there was a net loss of around 900 crores according to analysts. There is a call at 8:30 a.m. this morning, so more details then. But North America was also higher by around 7.5% odd on an adjusted basis. So there was the big exceptional which came in from India, which really marred the numbers this time. But if you really want to see the AbbVie bulk of the income of the $700 million in terms of milestones is actually already been recognized this quarter.
You could call it, what do they call it, sort of big bath accounting. So throw in everything together. Right? I mean, it looks like one of those quarters. But, 8:30, as Ekta said, is the call. And we will have more on this on that call as well, which I'm sure will come up. Well, Brainbees Solutions is the next one we're going to focus on. Mangalam is here with details on this one. Mangalam, morning.
Good morning. So, one would have liked the revenue growth to be a lot faster. The street was working with a number of anywhere between 20-25% sort of growth, keeping in line with the 3-year compounded growth that the company has reported. But at the same time, they've gone ahead and reported a 10% revenue growth. The EBITDA grew just shy, which meant that the margins kept at around that 3% mark itself. And this is a seasonally weak quarter, so the company continued to report a net loss of close to around 50 crores versus a loss of 62 crores. But remember, that's largely a cash reporting loss, because on the cash basis, they are profitable. A large part of the losses came in on account of the depreciation expense. Adjusted for share-based expenses, the company said the EBITDA actually grew 51% year-on-year. But it's not the EBITDA growth that the street will be disappointed by. More on the revenue side is something where the disappointment came. If you look at the India business, there too, the revenues grew by just about 8%. The international business, the revenues grew by 13%. And Global Bees, there too, the revenues grew by about 14%. For perspective, the last 3-year CAGR of the company in terms of revenue has been upwards of 40%. So in light of that, expect the stock to see some red today.
Okay, all right, got that. So that's Brainbees. Mangalam, thank you for that. Let's head back to Ekta. What about Max Healthcare and Narayana Hrudayalaya, the hospitals, Ekta? How did they fare?
No complaints coming in because Max, the revenue was up 21%, margins 26.9%. profit up around 59%, which was aided by a favorable tax impact of around 149 crores. But the statistics look good. The EBITDA per bed was higher this quarter. The average revenue per occupied bed for Max was higher this quarter, and at least on a sequential basis. And we had the international patient revenue, which was higher by around 25% year on year and 11% Q on Q. So that metric has recovered for Max as well. For Narayana, good numbers, 20% growth in the terms of revenue. EBITDA is coming at around 26%, and the profit was up around 30% this quarter as well. So both the hospitals performed well this quarter.
Okay, all right. Thanks a lot for that, Ekta. Going back to Sud. Sud, what about Exide?
It was a very weak quarterly earnings from Exide Industries, and mainly because of the demand postponement that company had seen ahead of GST rate cuts, and also they had taken production cuts in the month of August and September. Look at the headline numbers. Profit has fallen 26%, revenue was down 2%, EBITDA has seen a fall of 18%, margin too has slipped lower to 9.5% versus 11.3%. So it was an all-round miss, but the good part is company is saying that growth will be coming back very strongly in Q3. But on the back of Q2 numbers, I'm going with red for this also.
Okay, all right. So thanks very much for that. It's Exide for you. Inox Wind is the next one. Vivek is here with details. We speak with the management also, by the way, later. Vivek, take it away.
Well, that's right. So when we speak to the management, key to ask them would be whether they stick to the 1200 megawatt execution guidance. In the in the analyst call, post the result, they have indicated that they stick to it, indicating that H2 in terms of execution should be largely strong, and that may also imply that margins may moderate a little bit from the current upwards of 20% level. But still, we will need to check whether there could be an upward revision as far as the margin guidance is concerned. Now, talking about the numbers themselves, revenues higher by over 50%, EBITDA higher by 37.4%, EBITDA margins moderating on a year-on-year basis, but above the guided band of 18 to 19%, EBITDA margins at 20.3%, profitability higher by 42%, but remember, profitability number one was impacted by higher interest costs, and also there was a minority interest outflow of close to 29 crore. Second quarter order execution was at 202 megawatt, and the order book now stands in excess of 3.2 gigawatt, going with the green given the fact that in this particular quarter margins have been quite strong.
Okay. All right. Thanks for that, Vivek. And indeed, we will touch base with the management in a bit from now and get some more clarity. Here's a quick recap of the stocks to watch this morning. The ones that have positive news flow around them are Kotak Mahindra Bank, Siemens, Max Healthcare, Narayana Hrudayalaya and Inox Wind. Stocks with negative news flow around them would be Tata Motors PV, Oil India, Glenmark, Brainbee Solutions and Exide Industries. Okay, so that's the stock list for the day. Let's figure out what's happening in the world of commodities. We have Manisha joining in with a roundup of all the action. Manisha, morning, I remember reading apparently there was a drone attack on some Russian oil infrastructure in the Black Sea. Never a dull moment in the oil markets.
Oh, well, absolutely. It's been a very, very volatile last 10 days when you look at commodities. I mean, it's been the case for all of 2025 as well. But when you look at the crude oil prices, well, yes, the Russian refineries did see a shutdown caused by the Ukrainian drone strikes, and it was a 2-day shutdown. And the reason that you're looking at the crude oil prices declining in the Asian markets by more than 1 percentage point is that the Russians' Novorossiysk port has resumed oil loading operations after that 2-day shutdown. So we're looking at some pressure continuing for this one. The pressure also has continued for many of these metal prices. If you look at gold and silver, they have continued to decline as well. The markets are now assigning a 46% probability of a rate cut in the month of December. I mean, this is down by from nearly 85% that we saw before the previous US Fed meeting. So that is weighing onto the markets. Also, the dollar index has inched higher ahead of the US economic data. Having said that, gold is still up 55% in this year. This is the strongest yearly gain since 1979 that we've seen for gold. The only other thing that has seen some gains really has been the ferrous metal. So iron ore is trading in the positive, and so is the steel rebar futures trading at a 1-month highs in the Asian markets right now.
All right. Manisha, thank you very much for that. Well, that's basically the picture from commodities. Well, we'll take a quick commercial break here. We're going to come back. Dharmesh Kant of Chola Securities will be with us for some fundamental stock conversation. That Glenn call should be getting underway, and we'll have some sort of flashes from what the management is saying on that one as well. Stay tuned. Coming back.